Risk management involves identifying, analyzing, and accepting or mitigating uncertainty in your investment decisions. Now, put simply, it is the process of monitoring and dealing with the financial risks associated with investing. Joining me today is Tim Travis with T&T Capital Management in Orange County, California. Tim, one of the core concepts of managing risk is diversification. How do you know if you are truly diversified in your portfolio?
So I definitely don't believe that there's a cookie cutter approach to ensuring that a portfolio is totally diversified as it should be. I think what you have to look at is what risks are we trying to protect against? So and describe them. So there's market risk, there's interest rate risk, there's inflation risk, currency risk, all these various factors. And then what we're going to do is we're going to really stress test a portfolio based on how it would react to those various risk factors if an event were to happen. And then how does that align with the client? How does that align with the client's goals, risk tolerance, investment objectives? For example, modern portfolio theory might indicate that a client should own a certain amount of bonds, let's say, based on the historical performance of bonds in various climates. But up until 2022, really, we were in a period for the last decade where interest rates were insanely low, the lowest we've had in modern history. And the risk reward of owning those bonds was just not worth it. So, does buying a 10-year treasury bond with a 1.5% yield protect against market risk? Maybe, maybe it goes down less in a bear market, but you're also opening up a huge can of worms of interest rate risk, inflation risk. And we saw, those types of bonds went down a lot in value. So we tailor that approach. We take a business approach to kind of analyzing a portfolio and customize it for the client.
Now, can you explain the difference between strategic and tactical asset allocation?
Yes, so strategic asset allocation is really the long-term plan. Our goal, we got to save for retirement, or we got to pay for that education, whatever it may be. And so we're going to come up with a plan to achieve that based on fundamental analysis and understanding, okay, what strategies can we employ to help our client achieve their goal with the least level of risk possible. From a tactical approach, that's more the day-to-day. So, okay, we know that this client perhaps is focused on income. What tools do we have in our arsenal to achieve that goal? And so one thing that's unique about our firm is that we do have a lot of tools. Unlike a lot of more cookie-cutter firms that are just focused on gathering assets, we're gonna tailor everything specifically to the client. So that might mean using cash-secured puts. It might mean using covered calls. It might mean hand-selecting individual bonds for that portfolio. And so those are really the tactics, and they just go within the overall strategy. Maybe if the stock is too expensive, then instead of just owning stocks outright, if the market's too expensive, we might deploy other strategies that can give equity-like returns without the same level of risk.
So with all the volatility in the markets right now, the economy and the world for that matter, what are you telling your clients at this moment?
We tell our clients to focus on their long-term objectives. And it's easy to get caught up in kind of the day-to-day, month-to-month euphoria or pessimism that you see in the market. If your neighbor's making a ton of money on cryptocurrency, for instance, you might feel like you have to participate in that. You're missing out. And so what we focus on is outcomes and how do you achieve those outcomes. So if your goal is to earn 10% a year, and if one year you make 20%, and if one year you make 5%, your long-term goal is to make 10% a year. So you don't make major, huge changes. If the market was really good last year, that doesn't mean it's going to repeat next year, and vice versa. So really outcomes-based approach instead of getting too caught up in the current news cycle.
That's Tim Travis with T&T Capital Management in Orange County, California. Thanks for watching Retirement News Online.